In the previous class, we discussed about the few concepts related to the process costing. Today, we will discuss few illustrations which are linked to the process costing. Okay. So, let us start. Uh, so, this is problem number 1 related to the process costing. So, a product passes through 3 distinct processes to completion. 3 processes are the processes are numbered respectively 1, 2 and 3. During the week ended 15 January 2023, 500 units are produced. The following information is obtained. So, what are the information? First information is the direct material in process 1 is 3500 and direct labor is 2500. In process 2, the direct material is 1600 and direct labor is 2000. In process 3, the direct material is 1500 and in process direct labor is 2500. The overhead expenses for the period were 1400 rupees 1400 apportioned to the processes on the basis of wages. No work in progress or process stocks existed at the beginning or at the end of the week. Prepare the process account. So, we have to construct the process account from this information. Okay. So, we will see the solution. So, first is the process 1 account, right? Process 1 account. So, first the direct material, it is 3500, right? Direct material is 3500 and direct labor is 2500, right? And it is given here that number of units is 500, right? So, so 3500 divided by 500. So, it is per unit is labor is 7 and 2500 divided by 500. So, per unit labor is 5. 2500 divided by 500, that is 5. The overhead cost, they are saying it is proportionately, right? It is given here in the question that the overhead expenses of 1400 total apportioned on the basis of wages, right? So, if I do that on the basis of wages, so 25 by 70 of 1400, so it is coming to 500. So, per unit is 1, right? So, you add this, it is coming to 6500, right? 6500. So, 6500, there is no question of normal loss or abnormal loss. It is given here, no process stock also. In process, work in progress is not there. So, I am transferring the entire 6500 to the next process, that is process 2, right? And my per unit cost then it will come at 13, right? So, I am transferring it to the process 2. So, in the process 2, right, it got transferred. This is the process 2 account, right, which I am preparing. So, 6500 is transferred, per unit is coming to 13 per unit, right. Then in process 2, the direct material and labor is added. In the question, it is given 1600 and 2000. So, so we can add 1600 and 2000, right. Now, the overhead is proportionate overhead 20 by 70. It is added also, it is coming to 400. If I add, I am getting the total 10,500 per unit is coming at 21. So, this side this output transferred to process 3, right, output transferred to process, this will be process 3, it is 10,500, right. So, this 10,500 I am transferring to process 3. Now, I am coming to process 3 account. So, there are total 3 processes, process 1, 2 and 3. So, 10,500 from process 2 is transferred, right. Direct material 1500, I transferred 1500 and 2500. It is given here 1500 and 2500, right. This is added to process 3, and overhead expenses proportionately I added, it is 500, right. So, if I make the total is coming to 15,000 here. So, it is coming to 15,000. So, cost point is 30, right. So, 15,000. So, now all the 3 process accounts, process 1 account, process 2 account and process 3 account is complete. Okay. This is first one. The problem 2. So, this is problem 1 is complete. We are going to the next problem, that is problem 2, right. Problem 2 says that the Bengal Chemical Company Limited produced 3 chemicals during the month of July 2023 by 3 consecutive processes. In each process, 2% of the total weight put in it is lost and 10% is scrap, which from process 1 and 2 realizes rupees 100 a ton, and from process 3 it is rupees 20 a ton. The product of these processes are dealt with as follows. So, 75% is passed on to the next process, and from process 1 passed to the next process, from process 2 50% passed on process 3, and from process 1 25% goes to warehouse. So, from process 1 75% goes to the next process and 25% goes to the warehouse for sell. For process 2 50% goes to the next process and 50% goes to warehouse for sell. For process 3 100% goes to the warehouse. What are the expenses incurred? Expenses incurred is raw material 1,20,000, right, tons 1,000, and manufacturing wages 20,500, general expenses 10,300. In process 2, raw material is 28,000, tons 140, and manufacturing wages 18,520, and general expenses 7,240. Process 3, it is 107,840, tons 1,348, and manufacturing wages 15,000, general expenses 3,100. So, what you can do is you can prepare the process cost accounting showing the cost per ton of each product. So, you need to create a process account, right, cost account. So, we can move ahead. So there are, in this case also you see there are 3 processes. The product is going through 3 processes, but in this case a part of it, unlike the earlier problem, the entire output from process 1 and process 2 is not passing through the next process, but a part of it is going to the part of it is going to warehouse, right. So, first stage what I did, I created the process 1 account, right. So, the process 1 account 1,000 tons at 1,20,000 is the value, right. Manufacturing wages 20,500 and general expenses 10,300. So, we can see here, right, it is, see, in process 1 1,20,000, 20,500 and 10,300. Now, out of this loss of weight is 2%, 2% is 20, right, and sale of scrap is 10%, that is of 1,000 tons, that is 100. So, rupees 10,000. Transferred to warehouse is 50%, right, it is given here. Transferred to warehouse is 25% in process 1. So, 25% it is going to be 220, right, and then transferred to process, the remaining amount is transferring to process 2, that is 660, right. The value we can calculate transfer to warehouse is 35,200. So, the transfer to process 2 is 1,05,600, right. So, if I make the total on both sides, it should come to 1,50,800. Fine. this was the process 1 account, right? In the process 2 account, now next what we will do, we will create the process 2 account. So this 1,05,600, it is getting transferred from process 1, 660 tons, right? With this, we are adding the raw material again of 28,000. So it is given here, process 2, you see the raw material is 28,000 and manufacturing wages, it is 18,520 and general expenses 7,240. So in process 2 account, 28,000 added, manufacturing wages added 18,520 and general expenses 7,240. The total is 1,59,000, 1,59,360. So out of it again 2% is a loss. So 16 tons lost, 10% of 800 ton, right? 660 plus 140. If you add these two, you will get 800, right? Out of 800, 10% is sold as scrap. So 80. The value is 8,000. And transferred to warehouse again, it is 50-50. In case of process 2, it is given, you see, the transfer to warehouse is 50% and for sale, and 50% is moving to the next process. So it's coming to 352 and 352. Amount is coming, it is equal 75,680 and 75,680. The total is 1,59,360. Okay, fine. Now, so this is my process account 2, process 2 account. Now, this from process 2, this 75,680, it is transferred to process 3, fine. So, transfer from process 2, 352 tons, 75,680. With this again, in the in process 3, the raw material and manufacturing wages and general expenses are added, right? So raw material is, it is given here 107,840, 15,3100, right? So I'm adding here 107,840, 15,000 manufacturing wages and general expenses 3100. If I add, I get the total here. I get the total here 2,01,620, right? Now, out of this 1,700 tons, right? If you add these two, the total is 1,700 tons, right? 1,700, 2%, that is 34 tons is loss of weight, fine. The scale of scrap is 10%. So, 10% of 1,700 tons, 170. Its value is coming 3,400, and the rest is transferred to warehouse. After the process 3 is the final process. After this, the final product is getting transferred to the warehouse. So, it is coming 1,98,220, right, cost per ton. So, total is coming here, it should be equal 2,01,620, fine. So, this was problem 2. Now, we are coming to problem number 3. So, in problem number 3, we will also consider the abnormal loss. So, the problem is this: in process A, 100 units of raw materials were introduced at a cost of rupees 1,000. So, 100 units and at a cost of rupees 1,000. The other expenditure incurred by the process was rupees 602. Of the units introduced, 10% normally lost in the course of manufacture, and they possess a scrap value of 3 each, rupees 3 each. So, 10% is the normal loss, and it can be sold as a scrap at the unit at the rupees 3 per unit. The output of process A was only 75 units. Prepare a process A account and the abnormal loss account. So, we need to prepare an account for process A and we need to create an abnormal loss account. right? Okay. So, I am creating the process A account. So, this is my solution, right? This is my solution I am providing. So, process A account. So, how much is the process? So, 100 units. So, this is 100 units, right? What is the cost? Here it is given. Here it is 1000, right? The other expenses incurred in the process, it is given 602, right? The normal loss, it is saying 10%, it is given here 10%. So, 10% of 100 units each, 100 units were introduced here if you see. So, it is at the rate of 3. So, 10 units at the rate of 3 means 30, right. So, abnormal loss is, but output is only 75. That means the balancing, right, the balancing figure, it is what? It is the 15, which is an abnormal loss, right. If 10 is my normal loss, then the output should be 90 out of 100, but the actual output is coming at 75. So, the balance 15 is my abnormal loss, right. I can calculate the abnormal loss like this: units entered 100 less normal loss 10, less normal loss 10. So, normal output should be what? It should be 90 units. The normal output should be 90 units, but the actual output I am getting 75 units. So, my abnormal loss is 15 units, right. So, value of abnormal loss is normal cost of normal output, right. Normal cost of normal output uh, into the units of abnormal loss, right. So, now this normal cost of normal output, it is coming from, it is coming 1572, right. How it is 1572? It is, you see, here if I calculate, let me stretch it here, right. So, you see here, from here I am getting 1000, right. This is my raw material, plus 602 is my other expense. So, 1602, this is my expense, minus this normal loss is 30. So, if I deduct 30 from here, so I am getting what? I am getting 1572. This 1572 is mentioned here, right. And what is my you know, this 1572 should be my cost for 90 units, because 10 is my normal loss, 90 into the abnormal loss is 15, right. Sorry. So, 1572 divided by 90 into 15, so it is coming to 262. Okay. So, this 262 I am appearing here. Okay. So, value of abnormal loss I can calculate by using this formula: normal cost of normal output divided by normal output in units of abnormal loss. This 1572 I can calculate like this, right. So, 1572 divided 90, 90 is 100 units minus normal loss of 10 into the abnormal loss is 15 units, we have seen here. So, it is coming 262. So, I am putting 262 here. If I put this, the output value is coming, balancing figure, it is coming 1310, right, which will be transferred to the next process, that the process B, right. I can create one abnormal loss account. So, to process A 262, so by cash scrap value, so I can sell it at rupees 3, this 15 units, 45. So, balance 217, it will go to costing profit and loss account. So, the total is here 262, here the total is 262. Okay. So, that is how the abnormal loss can be computed for. We will see in the next illustration another problem where it is a case of abnormal gain, right, abnormal gain. So, this is the problem. In process B, 75 units of commodity were transferred from process A, right, at a cost of rupees 1310, right, at a cost of rupees 1310. The additional expenses incurred by the process were rupees 190, right. 20% of the units entered are normally lost and sold at rupees 4 per unit. The output of the process was 70 units. Prepare the process B account and abnormal gain account. So, we need to create two accounts, one is process B account and another one is the abnormal gain account, right. So, in process A, from process A, how much it is coming? It is coming 75 rupees, 75 units, right, and its value is given here 1310. So, I am putting 1310 here. Additional expenses, it is given 190. So, it is 190 I have given. Normal loss, they have said that it is 20% of the units entered. So, 20% of 75 is 15 units, which can be sold at rupees 4, right. So, it is 15 units and 15 into rupees 4 is 60, right. An abnormal gain I can calculate, right. How I can calculate? Units entered 75, normal loss 15, normal output 60 units, actual output it is 70. So, your abnormal gain is 10 units, right. Now, value of abnormal gain I can calculate by using this formula, normal cost of normal output divided by normal output into units of abnormal gain, right. So, this value is coming to what? This is coming to 1440, right. 1440. How this 1440 is coming? It is like this. So, my normal cost is 1310 plus 190. So, it is coming 1310 plus 190 is 0 1500, right. 1500 minus normal loss, this is 60. So, minus normal loss 60. So, it is coming 1440, right. That is how this value is coming 1440, right. And what is your units of abnormal gain? It is 10, right, and normal output is 60. So, 1440 divided by 60 into 10, it is coming to rupees 240. This 240 I am showing as an abnormal gain, right. So, when I am doing this, the total is coming 1740 on the left hand side for 85 units, right. So, under process C, the balancing figure is 1680, which is going to the next process, which is moving to the next process. So, 1680, so 1740, right. We can create an abnormal gain account. So, I am transferring this process B account from abnormal account from here, right. It is 240, right. Normal loss is 40. So, costing profit and loss account transfer is 200. So, it is 240 and 240. This is the illustration 4. These are the basics of process accounting. Thank you very much.